Now let's address some of the rehabilitation loan programs. We're going to look at programs that allow customers to make alterations or improvements and repairs on their properties. And we're going to focus on the FHA 203K program and the VA rehabilitation program as well. So we'll start with 203K. Now HUD provides multiple rehab programs, but the most popular single-family home program is the 203K insurance program for refinancing of rehab loans. So 203K enables home buyers and homeowners to finance both the purchase or refinancing of a house and the cost of its rehabilitation through a single mortgage, or to finance the rehabilitation of their existing home. The 203K program is FHA's primary program for the rehabilitation and repair of single-family properties. Now, as such, it's an important tool for community and neighborhood revitalization, as well as to expand home ownership. And it's important to note that the 203K refers to the section of the National Housing Act that allows FHA to make this insurance program available. So 203K fills a unique and important need for home buyers. When buying a house that needs repair or modernization, home buyers usually have to follow a complicated and costly process. The interim acquisition and improvement loans often have relatively high interest rates, short repayment terms, and even a balloon payment sometimes. However, 203K offers a solution that helps both borrowers and lenders, ensuring a single, long-term fixed or adjustable rate loan that covers both the acquisition and rehabilitation of a property. 203K insured loans save borrowers time and money, and they also protect the lender by allowing them to have the loan insured even before the condition and value of the property may offer adequate security. So the limited 203K program, and there's a couple of variations on this program, but the limited program permits home buyers and homeowners to finance up to $35,000 into their mortgage to repair, improve, and upgrade their home. Home buyers and homeowners can quickly and easily tap into cash to pay for property repairs or improvements, such as those identified by a home inspector or an FHA appraiser. Homeowners can make property repairs, improvements, or prepare their home for sale. Home buyers can make their new home move-in ready by remodeling the kitchen, painting the interior, or even purchasing new carpet. For housing rehabilitation activities that do not also require buying or refinancing the property, borrowers can also consider HUD's Title I Property Improvement Program loan. Property improvement loans may be used to finance alterations, repairs, and improvements for a home, including a manufactured home which has been occupied at least 90 days, a non-residential structure that's functional and was completed prior to the loan application, or to finance the construction of a new, exclusively non-residential structure. The improvements must substantially protect or improve the basic livability or utility of the property. So 203K insures mortgages covering the purchase or refinancing and rehabilitation of a home that's at least a year old. A portion of the loan proceeds is used to pay the seller, or, if a refi, to pay off the existing mortgage, and the remaining funds are placed in an escrow account and released as rehabilitation is completed. The cost of the rehab must be at least $5,000, but the total value of the property must still fall within the FHA mortgage limits for the area. And the value of the property is going to be determined by either the rehabilitation plus the cost of the rehabilitation plus the cost of the rehabilitation, or 10% of the appraised value of the property after rehab, whichever is less. Now note, many of the rules and restrictions that make FHA's basic single-family mortgage product relatively convenient for lower-income borrowers apply here, but lenders may charge some additional fees, such as supplemental origination, fees to cover the preparation of the architectural documents, and review the rehabilitation plan, and a higher appraisal fee. The extent of the rehabilitation covered by 203K insurance may range from relatively minor, though exceeding $5,000 in cost, to virtual reconstruction. A home that's been demolished or will be raised as part of the rehabilitation is eligible, for example, provided that the existing foundation system remains in place. Section 203K insured loans can finance the rehabilitation of the residential portion of a property that also has non-residential uses. They can also cover the conversion of a property of any size to a 1 to 4 unit structure. The types of improvements that borrowers may make using 203 financing are going to include